Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. A profit beat for UniCredit sees the Italian lender boost this year's investor payouts to €9 billion at the same time as it pursues takeovers at home and abroad. Gold touches a record high with the haven trade ramping up as Donald Trump slaps a 25% tariff on all steel and aluminium imports and warns of more levies to come. Plus, Fed Chair Jay Powell heads to Capitol Hill to face questions on inflation, tariffs, banking regulation and more.
In the meantime, a quick check on these markets. Futures kind of mildly to the downside, but I wouldn't call it a sell-off on our hands just yet. Maybe a little cautiousness certainly baked into this market. Eurostoxx 50 futures and FTSE 100 futures only down about 0.1%. The 10-year yield on the U.S. just opened, given Japan was closed, 4.49 that we're seeing there, higher by about 2 basis points. But I think a lot of the market focus is on that record high in gold Anna just mentioned, 29.16 on the precious metal. The countdown to the opening trade starts right now.
Tuesday the 11th. Good morning, folks. We've got a lot on the agenda this morning. Of course, we're talking about Trump. Of course, we're talking about tariffs. We've also got Powell coming up a little bit later. Bailey's on the agenda too. It is a busy day. But we start with the earnings story. This time yesterday, we were talking about Elliott and BP. This morning, we have numbers.
We have numbers, and we have buyback numbers, Guy, and that's important. $1.75 billion share buyback for the fourth quarter. Now, that's consistent with expectation. It's consistent with last quarter as well. This is the rate they've been running at in terms of the scale of the buybacks. But interestingly, they're giving us a bit of a forward-looking statement when it comes to buybacks and saying they intend to review expectations for 2025 share buybacks. Now, does that suggest that maybe those will be coming down? This is a business, of course, that is increasingly under pressure. We talked about Elliott taking a stake. Elliott's been busy taking a stake in Phillips 66 over in the United States as well. What exactly they want out of BP, we'll see. But the share price responded positively, up by 8% in yesterday's session.
We'll see if it continues that today. I think it's really fascinating because a lot of the oil majors have continued this buyback story, these massive profit stories. But BP, as we were talking to Will Kennedy yesterday, has been struggling for some time, yet they're still engaging in some of those buybacks, despite needing to address maybe some of the other structural issues in their business.
Does the buyback need to go up? Would maybe a question I would ask.
Elliott's at the table. Yes, what does he want to see? Is it buybacks or is it something else?
I read a lot of reports overnight talking about what Elliott ultimately may demand or require of this business, a US listing. Is that possible? Do we spin out the more sustainable parts of the business? And I'm talking about the green elements of the roster at the moment. How much is on the table? And it does seem as if the lens has significantly widened in terms of the options that BP's management, maybe it's the current management, maybe it's a new management, decide to pursue. But yesterday, a really strong share price performance yesterday. Does that continue today? Are these numbers enough to keep that moving?
You also mentioned there's a credit angle here. BP has a significant amount of debt. A lot of the maturity walls, though, are coming in the next couple of years. Something they're going to have to address as well, especially if you are seeing these kind of undercurrents of struggling.
Shall we move on to some of the other earnings stories we've had out? And UniCredit is also in focus then, Kriti. We've had numbers there.
Yeah, from oil to banking, it's kind of the same story here. Buybacks is getting people kind of excited again about some of these stocks that have been underperforming. I want to say they're American, arguably in some parts of Asia, they're Asian peers as well. UniCredit coming out, they're doing the same thing BP is. They're boosting their investor payout as well. This is as they talk about takeover deals. Again, unsurprising. We kind of expected this. It's quite in line with some of the other banks that we're seeing around Europe and around the world as well. They're talking about a profit here and boosting shareholders to the tune of €9 billion. They're still also, by the way, engaging in several takeover offers as well. So where does the kind of cash come back in is going to be my question.
I thought it was interesting the way that the UniCredit team trying to set out how they have the capacity to do all of this, because they're so busy with all of these stakes they've taken or pursuit of takeovers, depending. But on Commerzbank and BPM, they say that there would be no overlap in terms of the timing of these things, the teams that would be involved, the entities, even the legal entities. So certainly trying to put some distance between all of this complicated corporate activity. And interesting, Corriere della Sera in Italy reporting that the Del Vecchio family is considering decreasing its stake in UniCredit. So we'll continue to watch how that develops.
Is it going to fall to me to talk about fashion?
Yes.
Okay.
Naturally. Dressed to the nines today.
Let's talk about Kering. The company is definitely trying to cut costs. It's definitely trying to cut its bills. They're talking about property deals. They're talking to property funds to cut costs there. They've implemented a headcount freeze. The one person they do need to hire, though, is a new creative director over at Gucci, and there's no news on that either. This feels like a holding pattern. They're definitely in... This feels defensive. They're trying to figure out what to do next. They've got rid of the creative director at Gucci. They're trying to cut costs. They're trying to pick things up a little bit in terms of the top line. But they're saying that sales saw a slight improvement between Q3 and Q4. A slight improvement.
Yes, and you can see why they're changing the people at the top of Gucci, can't you? Because of the Q4 comparative revenue down 24%. I mean, it's a big drop, and it's a little worse than the market was expecting.
Particularly as others in the luxury space are beginning to talk a more positive story.
Yeah.
So Kering feels like an anomaly now versus what else we're seeing in the business. So I think it's going to be interesting. They're going to have to move relatively quickly. They're going to need to get their act in order. You can't hang around with others doing as well as they are. Let's talk tariffs and figure out exactly what Trump is up to now. We do have these new tariffs on aluminium and steel kicking in on the 12th. It goes across the board, right? So this isn't just raw metals. This is finished products as well, which I think is really interesting. So an A320, Airbus A320, I bring this back, of course, to the aeroplane business, 70% of the airframe is aluminium and aluminium alloys. A huge portion of an aircraft, because it's light and strong, obviously comes... In theory, it should be affected by this. Finished products going into America. Now, I know they make stuff there, but... How far does this go and how far does this reach into the supply chain?
And you say it's across the board, and as far as we know, it is at the moment. So in terms of the, how far along the supply chain of manufactured product. But in terms of the geography, here's an interesting one that also takes us back to the aviation sector. Australia talking about how they think that they might be exempted from this because they buy a lot of aircraft from the United States. And that makes you think, oh, well, there's an interesting opening, if that's what it takes to...
Ireland. Can I just point out that Ireland buys an awful lot of aircraft from the United States as well, in the form of Michael O'Leary and Ryanair. Does it get an exemption?
Yeah.
I mean, maybe. I don't know. I imagine that's going to depend on their take, perhaps, in the tech space as well. But I think it's interesting, going back to the Australian example, is that Donald Trump has made it clear that the exemptions and the kind of sweet spots come from the places where not only you have a trade surplus, which, by the way, if the folks in Germany are going to say, we don't want trade surpluses. It's not actually necessarily a good thing to have with the rest of the world. But I also think it's important because Australia has a lot of commodity exports to the United States and to the rest of the world. It also has a lot of China exposure as well. So I think Australia almost serves as a case study for how you deal with the two major economies of the world. Can
I just flag as well, the other story which really caught my eye this morning was Trump ordering the Department of Justice to halt the Foreign Corrupt Practices Act, the FCPA. Keep an eye on that one. Trump is basically saying it's holding back American businesses. But that has been an act that has had a huge impact globally in reducing corruption, and you do wonder what the long-lasting effects of that could ultimately be.
They're halting it pending a review and a new set of rules, aren't they? So they are halting the enforcement for now, but we'll see what the new rules look like.
It's going to mean a lot more business for America, Donald Trump says.
OK, let's move on. We'll leave that one for just a moment. What have we got coming up on the show? Yogi Diwan, Hassiem Asset Management CEO, is going to be joining us to talk markets in just a moment. Jonathan Lavine, Chair Bain Capital, is going to be joining us. Credit has been remarkably stable in the first 3 weeks of the Trump administration. Other asset classes, lots of volatility. Credit, very little. We'll talk about that. Louise Dudley, Federated Hermes Global Equities Portfolio Manager, joining us a little bit later, as is Marcus Garvey, to talk metals, the Macquarie Group head of commodities strategy. Kriti.
Plenty on the day ahead as well. Things to look out for. Andrew Bailey going to be speaking at 12:15 p.m. UK time. Just about 3 hours after that, we get that testimony in the Senate Banking Committee with Chair Powell. But then earnings do continue. We just had UniCredit. We're going to get Banco BPM after the bell today. There is that consolidation story. Coca-Cola after the bell. McDonald's came in yesterday, actually, with some really interesting numbers. Weakness in the United States, which I thought was interesting, but better numbers internationally. I wonder if Coca-Cola says the same thing. And then AIG as well.
We are going to be listening to Powell. Of course, a lot of what's being talked about in terms of monetary policy really overshadowed by what's coming out of the White House, and Powell and team just sort of playing for time and waiting to see what this is going to do on the inflation front. But he's going to be getting a tough... Our colleagues pointing out this morning, he's going to get a tough hearing when it comes to the sort of bread and butter of finance, maybe around banking regulation, but then also on the other items on the Trump agenda, for example, DEI policies, all of that, and the way that Fed is implementing those. So this could get very political, whether Jerome Powell wants it to or not.
I have sat through many, many, many of those hearings. They are usually fascinating. This one actually could be quite interesting in terms of just how Powell navigates the politics around this. He has tried to keep his head down. How successful will he be today? I think will be interesting to watch.
Did you watch them with or without popcorn? What was the snack of choice during the testimony?
Popcorn definitely was.
Popcorn is high risk on set.
I don't know. You feel like someone who lives on the edge.
I don't know. 2 hours of. I think I had time. Believe you me. So yeah, I think today actually could be an interesting watch. What else do we need to know this Tuesday morning? Let's walk you through all of the other stories that we're watching. The US President Donald Trump says Israel should call off its ceasefire with Hamas if hostages aren't returned this weekend. All hostages. The president spoke hours after Hamas announced it was indefinitely proposing the next release of Israeli hostages, accusing the country of delaying the returns of Gazans, opening fire in different parts of the Strip and denying the entry of aid. Israel and Hamas's announcement accounted to a violation of the ceasefire, and the country's military was placed on high alert. The French Finance Minister Eric Lombard says France will keep a digital tax that hits major US tech firms despite past threats of tariff retaliation from President Trump.
We are prepared to do whatever is necessary in order to be balanced. We have the same tools, we have the same weapons if need be, and we will use them very calmly. It is not a negotiating tool, we have it already in place. We will have the negotiation and the discussion with the US administration.
The digital tax, implemented back in 2019, has become a significant source of income for France, generating around 700 million euros in 2023. Just think of the stress that is on the French budget right now and think about whether or not they're going to give it up. A group of investors led by Elon Musk has offered to buy the non-profit that controls OpenAI for $97 billion. In a statement, Musk says he hopes to return OpenAI to being the open-source, safety-focused force for good that it once was. OpenAI CEO Sam Altman rejected the bid, using a post on Musk's X platform to say, no, thank you. So he's after the non-profit, which at the moment controls the business, but Altman wants to basically convert this into a profit business, and the non-profit element would remain a significant chunk. But valuing all of this is where the challenge lies. And you do wonder whether Musk is really after the charitable arm or actually just wants to delay the conversion.
Right, yeah. Does he want to mess with the valuations here? Or is this part of a long series of things he has against Microsoft? Because obviously Microsoft, big investor in OpenAI, and he's not been a fan of Microsoft, has he, and what they've been doing there. And he has made suggestions in the past about the way that Microsoft, in Musk's view, has tried to put restrictions around companies doing business with XAI and other AI businesses. So, yeah, maybe it's part of that series.
I love that tweet that Sam Altman said, though, you know, we won't sell OpenAI, but maybe we'll buy Twitter for 9.74
He called it Twitter
billion.
As well, not X. He called it Twitter.
I thought that was
it's fascinating as well because it also comes in light of Elon Musk saying that he doesn't want to engage in a TikTok and a U.S. TikTok deal as well. And we should also mention on the valuation front, OpenAI has already had several rounds of funding. So when it comes to actually funding the research, they're getting a steady flow of funds, not just from Microsoft and the U.S. investor base, but internationally.
And when we're going to talk corporate debt, I know, later, and talking corporate debt, Morgan Stanley busy selling off lots of the ex-core debt that they accumulated at the time that Musk bought Twitter. They got stuck with it. Lots of banks got stuck with it. And now, because Musk is in the White House, there seems to be a sweet spot for selling it to the market.
Still at a discount, I think, isn't it?
I'm not sure.
I think it is still at a discount.
Slightly.
It's been hanging for a while.
They're in a rush to get rid of it, seems to be the tone. Perhaps.
Absolutely. The Venn diagram of Elon Musk at the moment is genuinely amazing. Kind of the overlap. He sits in the middle of it. There's a lot of circles coming together.
Can you have more than three? I'm not sure. Coming up on the programme, we're heading back to Paris, where Tom McKenzie is still on the ground for us, continuing to bring coverage of the AI summit that's taking place there. We'll hear more from our exclusive interview with the French finance minister. Plus, UniCredit CEO Andrea Orcel gets an earnings boost amid his multiple takeover fronts. We will check on the stock. We'll check on UniCredit at the open. Up next, Trump's tariffs ramp up, and so does the Haven trade. We'll dig into the markets next. If you want to get involved in any of these conversations we're having around the desk, IB plus BBTV Go, that is the function on the Bloomberg terminal. This is Bloomberg. Welcome back, everybody. This is the opening trade, 7:18 here in London this Tuesday morning. Now, March the 12th is the day that Donald Trump has confirmed his new tariffs on steel and aluminium will come into force. Let's see how the markets are digesting all of that news flow. Here's Bloomberg's Valerie Teitel with the details, and he's announced the measures. He's given us a bit of detail, a bit more detail than we had yesterday then, Valerie.
Yeah, that's right. And I have to say, though, that equity markets, risk markets generally have been holding up pretty well this week so far. Yes, we are in the red when it comes to S&P futures today, but you take it a two-day move, we're holding in pretty well. The Bloomberg U.S. dollar index is also been quite steady, but what has been on the move, Anna, is gold. Another record high overnight for the yellow metal. What is driving this? Is it safe haven demand because of this widening trade war, or are there other factors at play? Other things that the market will be watching out for were the reciprocal tariff announcement from Donald Trump. He has hinted it could come as early as today, perhaps tomorrow. Bloomberg Economics did some analysis on which economies are most vulnerable to these reciprocal tariffs. It is these countries here in blue: Brazil, Africa, and then India. So EM economies are exposed. But I will be watching what Trump says when he does make this reciprocal announcement. Does he pick out the European Union, Anna? Does he talk about the European auto sector, for example? Are there specific sectors on his mind when he announces these reciprocal tariffs? The other thing on markets' mind is what Powell could tell the Senate Banking Committee when he takes a stand at 3 p.m. London today. He will be issuing a statement off the bat, and normally if he does want to make a big call, a change in language, he will do it there. But he will be asked, he will be grilled on his opinion about Trump's economic impact of his policies. Also, watch out about questions about banking regulation. He'll be asked whether he's on the same page as the Trump administration, whether he's a fan of this push into deregulation when it comes to the banking sector. But watch out. It's his first day of a two-day testimony, but normally if he does want to move markets with something substantial, it happens in the statement.
OK, Valerie, thank you. Bloomberg's Valerie Teitel with what you need to watch from Powell and all we know so far about the tariff story. Let's, with that in mind, go to Yogi Dewan, CEO of Hassiem Asset Management and a fairly regular guest on this programme. So, Yogi, nice to see you back here. Thank you for coming in. Let me ask you about the Europe versus US and the tariff threat, because we've actually seen European stocks. We've talked about it on the programme a number of times this year. European stocks doing OK. Stock 600 up by 8% year to date. US stocks, S&P up 3%, NASDAQ up 2%. So Europe is outperforming. Various theories as to why that is. Is that outperformance, though, vulnerable to more detail on the tariff threat?
Almost certainly. If you look at Europe, it has two sectors that are quite vulnerable. One is obviously the car manufacturers. The other one is the drink industry as well. As you rightly say, Europe is up about 8 to 9%. The US is up 2.5 to 3%. There is a big valuation gap. It's the widest it's ever been. The S&P 500 is trading at forward PEs of 26. Europe's trading at forward PEs of 15. The UK is trading at forward PEs of 13. There is also a very weak currency, both in Europe and the UK, relative to the dollar. Europe is about 30% undervalued in terms of currency. Sterling is about 18% undervalued on a PPP basis. So you start to see flows. But remember, Europe's sector exposure is very light on technology. It's defensive in nature. So you're seeing a lot of rotation out of tech. You're seeing the Mag 7 underperforming the US, and you're seeing flows into Europe. That's really what is driving markets at the moment.
OK, and what is driving that flow out of technology? During the earnings season, of course, we've had updates on wages and capital expenditure, and there's nervousness around the capex bill for some of these large Mag 7 businesses. Is that it? Is that the story? What do you think is making people question? I mean, obviously DeepSeek got a lot of headlines a couple of weeks ago, but we're still not exactly certain what that threatens.
Yeah, if you actually look at Q4 earnings season, we're talking about 16% earnings growth, 5% revenue growth. These are really, really good numbers. The problem with tech, as you quite rightly say, is CapEx expenditure, employment costs, all eating away at margins. And you're actually seeing the Mag 7 underperform year to date. If you actually look at what's happened to the S&P 500, as you say, 3% up. If you actually look at the S&P 500, excluding the Mag 7 or the S&P 493, it's actually doing a lot better. There's about a 2% margin. So you're starting to see investors get really anxious about the AI cost narrative. They're getting very anxious about DeepSeek and what's actually going on in China. But ultimately, it's an earnings story. Remember, it's earnings that drive share price appreciation, and they're just not coming through with what's going on in the US and the tech space.
If America falls 10%, does Europe fall 5% or 15%?
I think Europe will fall less. If America starts to fall, you will still getting flows into Europe. Europe is a valuation story. It's a defensive sector story. That does not change. As you quite rightly said earlier on, the valuation gap has been there for a while. There is no new story here with Europe. It's purely about flows and reasonable valuations.
So I can use Europe as a diversifier. I can use Europe as a hedge against the high valuations in the United States.
Yes, we are. We're looking at Europe. We're looking at the UK. Now, don't forget, Europe is having problems. Yep. Germany and France having problems. Yep. Spain is doing well. The growth narrative is one to be concerned about. You've got GDP growth of 0.9%, both in Europe and in the UK. And we're expecting rate cuts. The rate cuts in Europe are going to be significant. Will it be a diversifier to US underperforming? Yes, almost certainly. As will China.
OK. Why? Is it just a valuation story?
China, definitely not. China, the valuation story is an intact one and robust. But I think there's a lot of interesting things happening in China at the moment. Obviously, DeepSeek and the AI narrative is very important. Yeah. We've had a lot of data out about electric vehicles and cars. We've had a lot of investment in energy sources. These are all bits of good news in China, which is flat year to date.
In both economies, the economy's flatlining.
From a GDP growth perspective?
China kind of relative to expectations is
of course. In Europe, yeah, no, absolutely, growth is flatlining, but valuations are cheap and the currency is very, very weak. This actually helps provide support and it's defensive sector exposure. It's low on tech exposure relative to the US. That's what investors like. Now, put this into context. Yep. If you look at France, if you look at that as an economy, it's a very similar size to Nvidia. If you look at Apple, it's the same sort of size as the UK in terms of economies when you look at GDP and market cap. Yep. These are significant numbers. Mag 7 is almost as significant as geographical allocation to countries.
You make the point on the currency exposure, and that I thought it was interesting to call Europe a defensive, almost a defensive play at the moment. Someone historically would argue it's a cyclical play. So why does that change, especially when there isn't that secure exposure that so many people seek safety in the States in the form of tech? Why is it a defensive sector in Europe?
I think it's a defensive sector purely because it doesn't have the same sort of tech exposure that the US has. It's not dominated by the Mag 7.
Isn't that the definition of defensive, though? A steady cash balance, strong flows, and in terms of it, that's why tech is seen as defensive, isn't it? Because it's a safer trade with a thicker cash cushion.
I always see tech as a growth story. And that's reflected in the valuations of the Nasdaq and the valuations of the Mag 7 names. When margin starts to get eaten away, you start to question whether that story is going to continue. Remember, earnings growth of 16%, revenue growth of 5%. We focus more on the revenue number because that's a harder number to manipulate. In Europe, you've got muted growth, as Guy has already said. However, in the US, there's a lot of vulnerability. There's a lot of caution at the moment because of Trump tariffs, because of the growth narrative, and people being concerned about this GDP growth figure of 2.5%. Is it sustainable in the US?
Yogi, I think you've brought in a breath of fresh air? That's the phrase. A breath of fresh air of European optimism. We don't rarely find that here this morning. We thank you so much. Yogi Devan, CEO of Hassiam Asset Management, joining us this morning. Coming up on the program, we're going to talk about all of this in the context of credit markets. Are they being too complacent in the face of Donald Trump's tariff threats? That conversation next with Bain Capital's Jonathan Lavine. This is Bloomberg.
30 minutes from the start of the opening trade. Welcome back to the programme, everybody. Tuesday, the 11th of February. Let's have a quick look at where we are on the futures picture here for Europe. Things looking a little mixed. We've got the detail, a bit of detail at least, around Trump's intentions towards steel and aluminium trades. We know about the tariffs there. We're waiting, though, to see what the rest of the tariff story is going to look like, and we're waiting for more on that this week. So the futures picture looks fairly mixed. US futures look weaker. Nasdaq futures down by 0.4%. E-mini is down 0.3. A little bit of movement in bond markets in Europe. Yields just a touch higher, echoing what we've seen in Treasuries, where we're up just a fraction. The yield on the US 10-year is 4.50 right now. Guy?
So it probably feels like it's longer, but we are effectively only 3 weeks into the Trump administration. So for many asset classes around the world, we've seen not much stability. Stability has been in short supply. So the calm in the credit markets does seem to many a little odd. The valuations remain tight. Spreads certainly are tight by historical standards. Valuations are high. So given what's happening elsewhere, is the credit market being, some would argue, a little complacent? Joining us now to discuss, Jonathan Lavine, the chair of the credit giant, Bain Capital. It's 2:31 a.m. in Boston, so we're just going to sort of put that out there.
I appreciate that.
Is the stability a surprise? Should it be a surprise?
At this moment, I actually think the credit markets are performing the way you would expect. All the discussion right now on tariffs, first of all, we don't know what they are. You know, there's policies going up and down. But right now, we're in a band where it might affect equity returns, but I don't think it affects the overwhelming creditworthiness of the broad sector of the credit markets. That said, you need to be aware that, you know, tariffs, and if there's enough of them, effectively are a national sales tax. And could that have some sort of depression of demand if all of them get implemented all at the same time? But we don't know that yet. And I think the trick right now is to study the possibilities, but only react to the reality.
OK, so let's talk about how, therefore, the portfolio companies, the companies that you invest in, are seeing the world right now. What feedback are you getting in terms of how they are analysing the situation in front of them? Are they starting to adjust? Is that where the adjustment begins and then it sort of creeps back up into the credit market more broadly?
Well, it's interesting because COVID actually resulted in a lot of people rethinking their supply chains to begin with, whether it's a China plus one supply chain, whether or not it's onshoring more things just in case markets ever get shut down again. And therefore, there actually is a head start there. I think that there's a lot of work going on in our portfolio, understanding which businesses are super regional. So there's a lot of businesses we support in and we invest in Asia, whose whole business model is just supporting around Asia. And there's European companies. So I think everybody assumes that there's, you know, everything affects everything else. So I think companies that are truly multinational, that have truly multinational supply chains, there's a lot of work going on right now, understanding, is it components, is it material, or finished goods, and trying to understand the degree. Because I think there'll be sort of three impacts. There'll be finished goods, which are quite obviously big tariffs will be a huge problem. There'll be things that have material components where the price will go up, and that could affect it. And then there will be things like some chip that goes in a clicker or something like that that may or may not affect the overall price, but people will need to understand, you know, small, medium, and large, and how that's going to affect pricing and demand.
Yeah, Jonathan, good morning. So that's a really useful way of structuring our thinking around different sectors and the extent to which they're going to be impacted. So when you look across your portfolio companies, are there particular sectors that you're concerned about, that you say, yeah, they'll be in the first of those categories where, you know, tariffs are going to be an issue, and I am going to have to worry a little bit more about creditworthiness? So
clearly the biggest area is automotive. Trying to understand, because there are so many parts that go across, you know, there's one General Motors car where, like, it goes across the Canadian border 6 times, different components. I don't even know how you figure out the tariffs on that. I think some consumer products that are brought in from overseas, that could have a real impact on demand. That said, the question is substitutes, and the question is how fast can you replace whatever the tariffs are going to impact. The second thing is how long they're going to last, and when they're going to be implemented. There's usually tariffs are implemented to accomplish a particular narrow goal. The aluminum and steel tariffs, you know, make sense. There's a particular issue. There's a particular broad-based tariffs. You sort of won't be able to analyze when they're going to go away. And there are a number of tariffs from the first Trump administration which never got repealed by Biden, even though he was against them, because tariffs tend to be sticky.
Tariffs tend to be sticky. And do we know enough about the way that this Trump White House is going to operate yet to know whether there will be a time during this administration where we will know the full story on tariffs? Or will we always be on edge, on our toes, waiting for new developments on the tariff front? They could come at any time, is how it feels at this early stage.
At this moment, clearly nobody knows. that said, the Secretary of Treasury, Secretary of Commerce are people who come from the business world, participate in the global economy. And if those voices are heard, I think that hopefully there's an analytical underpinning to what happens. There is a style element of, and I'm not commenting whether it's a good one or a bad one, but one style element is go big and then bring it back. The other one is go, trickle along and then go big if you need to. We're clearly in the go big and pull back.
I think we are, yeah.
And therefore, that might work.
Yeah.
And therefore, the question is, what does pullback look like and how do they signal it?
Is there an argument to be made, and I'm going to harp on the first comment you made, that tariffs equal national sales tax, basically. Is the timing kind of perfect to put that national sales tax on the American people, given the consumer resilience that you're seeing in this economy, the pent-up savings that still haven't been fully deployed to the market? Is the timing right to put this kind of tax on the U.S.?
The bigger question, U.S. tax policy is legendarily complicated globally, and therefore, I think the timing is right to understand all the sources of tax revenue and various rates and what has unintended repressive consequences like a national sales tax might. And the second element is the U.S. needs revenue. The U.S. needs revenue to pay down debt. We need somehow to get our budget closer to balance. And therefore, I'm not sure in isolation just putting a new tax out there is a good idea. If it's part of a larger system with a strategy and a purpose, it could be, a good time. That said, we are all right now in a time where we are spending a lot of time dusting off our Ec 101 textbooks from college, looking at comparative advantage and tariffs and elasticity of demand, because those are all the questions that this is going to raise. How much can this do before it raises prices? Should the U.S. and any country be operating, and doing all this manufacturing onshore? And if so, how are you going to deploy that?
You mentioned the sources of revenue. Donald Trump is kind of forging his reputation as a deal maker as well, bringing investment from SoftBank, bringing investment on the AI front in terms of data centers from a variety of people internationally. Is that an appropriate tailwind? Do you foresee those investments that are being promised actually coming to the States?
That goes in the not sure yet, because there were a number of them that were announced during the first term, some of which happened, and a number of big ones that didn't. And I think it's really important to, I don't think that our job is to predict, it is to react, but to study closely and react as fast as you can, and to the best available data. And we need to see those get implemented. To build a factory takes 5 years. They want to invest. If we raise an LBO fund, we don't invest it all tomorrow. It takes years to invest that. So the question is, how long will it take to deploy?
Is Donald Trump going to be good for LBOs? The idea was that this was going to be the year when kind of the deal story really kicked in. We've just had the worst January in a decade for M&A. Is he going to be good for his promise that we're going to see deals coming through? Do you think LBOs are going to pick up?
So I think that the LBO market is bigger than even the President of the United States in terms of it is a global market.
Yeah.
LBOs that we're doing locally in geographies outside the United States, locally in geographies in Europe, are sort of unimpacted. Within the United States, I think that there's lots of really interesting things to do. I think that there will be certain types of deals that people might shy away from early on, things that have lots of imports and you've got to figure out all the components. But I think a strong economy will make for an interesting deal time, given there was a little bit of a lag. Although last year, our private equity business, our special situations business, our private credit business all had super high deployment on really interesting activities, because you have to go industry by industry. And it's not just about a large swath of the economy. It's how each subsector is doing. And technology could be up, manufacturing could be up, automotive could be down, and there could be. It's much more nuanced than just what's the macro picture and what's the 10-year.
Yes. And thinking about the technology and the way it's developing, it's all moving very fast, Jonathan, and we talk about AI almost daily, it seems. Are you looking at portfolio company? Are you looking at businesses that you're close to and seeing evidence of these AI benefits getting bigger and bigger and closer to the consumer, and it being less about the people who make the chips, for example, and more about what companies can do with AI and the technology?
Absolutely, including ourselves.
Yeah.
I think AI works on a couple of dimensions. One, there's within our business how we make better decisions. Having a tool that can help us look at every decision we've made for 40 years and look for trends and patterns, super helpful. Things that can help automate process earnings releases faster, market information and things like that. And then within our portfolio companies, it's been really helpful. We've had some that have helped us with product launches, with simulations that might take 6 months that we could do automatically. And we're constantly looking for ways to integrate AI into our business model across the board. That said, it is not at the point yet where you can blindly rely on it to be correct.
Yeah.
And therefore, there is still that human overlay on it. But I think you should neither be scared of it, but you shouldn't run to it like all of a sudden there's a new gizmo and just blindly follow it.
Does that necessarily mean that some of the kind of reaction functions become more volatile or less volatile? Is there an element of complacency in this market, or is this caution? How do you interpret that?
I think that with AI, it is developing. I do think that there might have been an overreaction to DeepSeek, but it did wake people up to the fact that maybe there is going to be a super app out there, or AI will help develop more AI apps, and therefore it's not as clear cut as. And we're huge fans of data centers because whether it's this big or this big, it's going to be big. But looking at the CapEx story is going to be really, really important. And it's not that ultimately it won't be, but if you overbuild in the short run, it could run. You just want to make sure you don't do what happened with fiber in 2000, 2001.
See, I like this. This is an illustration for TV.
Yeah.
Wouldn't work for radio, but
Yes.
We're lucky this is a visual medium, so we're good.
Yes.
So I can see how big Jonathan's reach is this way. How big is his reach this way? I imagine you're a Celtics fan.
I am.
Jason Tatum can go pretty high.
Yes.
You guys have got an interest in the Celtics, is that right?
That is correct. We are individually, a number of the partners of the firm are invested in the Boston Celtics.
So is that a long-term investment? There's a deal that's closing fairly soon. Is that something that we can expect? I'm kind of asking for the fans.
Yes.
and wanting to know.
So we've been in it for 21 years. The Control family, the lead family on it, has chosen to sell their share, and we will see what happens with who winds up buying it, whether it's us or somebody else.
My son is obsessed with Jason Tatum.
Yes. He should be. He's a great player and great guy.
Obsessed. Jonathan Lavine, great to see you. Thank you very much indeed. Jonathan and I are about to disappear, actually, so I just point that out. We're going to a fantastic LSE event.
Yes.
Which is organised by the students.
Yes.
So we're very much looking forward to that. So I'm going to say goodbye to you guys.
Excellent. I had a note to ask Guy where he was going, and I'd actually forgotten the answer to that.
This is your farewell.
Now I know.
All right. Well, we wish you guys a very good rest of your day. Coming up on the program, stocks to watch, including UniCredit, the Italian bank, boosting investor payouts as the CEO pursues more deals. We're going to dive into the details next. This is Bloomberg.
Welcome back. This is the opening trade, 7:47 in London. So we have 13 minutes until we start equities trading for this Tuesday morning. Let's get to our Markets Live executive editor, Mark Cudmore, who's with us back on the programme and can give us thoughts on the markets in 3 minutes. Mark, good morning to you from London. So tariffs, we're on that subject again. We're a little bit risk off. If I look ahead to the European session, it's mixed. US futures look a little negative. Do we attribute that to the latest tariff news lines? What impact do you see on risk appetite?
I think we do attribute that to the latest tariff headlines, but it's amazing how subdued the reaction's been. And I think that shows that the tariff headline fatigue out there. And also, traders don't have much conviction of what tariffs will actually be implemented. There's a growing belief that there will be extensive tariffs implemented by the US, but exactly which ones is very hard to know. We keep on getting threats and then delays, and there's very few that have been implemented so far, apart from the ones against China, and that makes it very hard to trade aggressively. Generally, the theme of the past couple of weeks is this is an exhausting market to trade. It is a sniper's market. It's about headline trading, and you don't really stick with positions. You kind of trade aggressively, take profit, and sit for the next headline to kind of attack. I think ultimately, though, this tariff noise is doing a lot of damage to the US, to US companies, but that's a very long-term story and not one to trade in the short term.
Would you put gold as a part of that short-term / long-term trade? Where does that fall into all of this?
Yeah, that's a great question, Kriti. I mean, look, clearly it's been the haven of choice at the moment. I think that's because what's happening, the reasons for risk aversion are deeply undermining for the US longer term. Of course, the US is still the world's reserve currency. Of course, treasuries are still the world's main bond market and haven asset. But, they're certainly less appealing at the margin to where they were before. So people are casting around for other haven assets. And gold really kind of stands out there. So we are seeing a number of dynamic central banks buying more. We're seeing that, in fact, China have made rule changes so their insurance market can buy up a lot more. That's another long-term dynamic. All these are subtle, but the fact is, in this period of the havens in the US getting undermined, gold is looking more appealing for the long term.
Yeah, so what does it mean for global stocks then, Mark? We've just had a conversation about how maybe maybe the Mag 7 disappointed on earnings, maybe they're all really expensive versus Europe. So one investor telling us, buy certain European names as a result, others saying valuation isn't enough to motivate diversification away from those US stocks.
I think it will be enough. I think ultimately we're going to have a productivity kind of revolution driven by AI over the coming years, and that's going to be very, very positive for global growth, global stocks. Now, US stocks are already pricing that premium, so they're not appealing at the moment, but there are discounted stocks around the world that are looking very appealing. Now, that is long-term. It is true in the short term, people aren't going to rush into it. But I think that overall this year, global stock markets will do relatively well. With a lot of volatility, US stocks will underperform.
OK, so it's all about the price. Thank you very much, Bloomberg Markets Live Executive Editor Mark Cudmore. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go, that's the function you use on the Bloomberg terminal to stay across the Markets Live blog. Let us get to Kriti now for what has caught her eye. Kriti.
Well, Anna, with all this geopolitical almost volatility, we've kind of maybe overlooking some banking consolidation news this morning. Corriere della Sera, I worked very hard on that pronunciation, reporting this morning that there's a 2.7% stake that Delphine owns in UniCredit may be under some scrutiny here. The idea they may actually consider selling that stake. And this is really important because we know the Delphines, which of course is the holding company of the Del Vecchio family in Italy, has several stakes across the Italian bank sector, Mediobanca and Generali and Montepaschi as well. I just want to put this in the broader scheme of this kind of banking consolidation wave that we're seeing, because we know that UniCredit is in the middle of a takeover deal for Banco BPM, which is in terms of some takeover and stake deals here. UniCredit also talking about trying to get a stake in Generali as well. There is a lot of banking consolidation very much in the Italian banks this morning. We're likely to get some comments, at least from the UniCredit, but of course from Banco BPM after the bell as well. And I know that's something that's on Joe Easton's radar as well when it comes to stocks he's watching. Joe.
As Kriti was explaining, there's a lot of news flow in terms of the M&A over in Italy, but we've also got earnings out of UniCredit today, and they are looking better than expected in terms of the net interest income, and they are returning a decent amount of cash to shareholders as well. But as we can see from this chart, that stock has done pretty well, so potentially expectations are high going into this, and as Kriti said, we will wait to see if we get any further commentary from the company, particularly around their pursuit of BPM and Commerzbank, and also that stake in Generali. So comments to watch, certainly, from their earnings call later. Then in terms of BP, another one that's been in the headlines this week. Now, we did see the biggest gain in 2 years for BP yesterday on news that Elliott had taken a stake in the company. And in terms of their numbers today, we are seeing some beats in terms of the adjusted net income for BP. But this is a stock that has had a bit of a torrid run, and hence why Elliott is pushing for potential changes. The company today saying that they're going to review their buybacks potentially, and also potentially even reset their strategy, given that interest from Elliott coming in. Then over in the luxury space, we've got numbers out of Kering. Once again, a big drop, a 24% drop in sales from Kering. That is slightly worse than analysts were expecting. We can see that stock really fallen a lot over the past couple of years, down more than 50% in terms of Kering. So it's a question whether these expectations have already been reset and if there will be a bit of a relief on that one. We would keep an eye on some of the peers as well. We have seen a rebound in a lot of these stocks year to date following some strong reports from the likes of Burberry and also Richemont as well. So potentially some of their renewed optimism priced in, but we'll see how Kering and the peers open later today in Europe.
Thank you very much. Our equities reporter Joe Easton with a rundown of those stocks in focus. So we'll watch the banking sector, we'll watch the energy sector and the luxury space as well. We've had corporate earnings out from all of those. Yesterday was dominated by energy news flow with that BP share price move. That certainly lifted energy stocks around Europe. They were the strongest performers in yesterday's session, so we'll watch to see what gains that crown today. The market open is next. This is Bloomberg. Welcome back to the programme. A few minutes to go until the opening trade then. Let's have a look at yesterday's session, recount what happened stateside, see if that gives us any clues as to where we go at the start of Tuesday's session here in Europe. So this in white is the European session of yesterday. It started off a little fragile and then gained momentum or gained as we went through the day. The US, on the other hand, rallied out of the blocks and then sort of was treading water through the session. So that doesn't necessarily give us a sense of needing to go higher and some further upside to price in after that US session had closed out. So European futures, as a result, looking a little bit negative then, Kriti, or at least flat. There we are. Flat to negative, I guess you'd call it. Let's not overdo it. FTSE and CAC futures pretty flat this morning. Euro Stoxx 50 futures down 0.1%. So we've got the facts around tariffs to price in here. We know what is planned around steel and aluminium. Now, when it comes to just how far up the supply chain or how far along the supply chain those tariffs will go then, Kriti, and that at the margin, that's the new information, and that could be negative for risk assets, it seems.
Yeah, absolutely. But on an individual basis, maybe seeing some green baked onto the screen. And this is really crucial here, especially when we're talking about some of the individual movers that have really talked about reporting their earnings this morning. BP, UniCredit, perhaps indicated to the upside. I'm going to start off with BP here simply because there is a strategy reset afloat. This comes after the activist management firm Elliott is talking about a potential split up of the company. We'll see how that's well received, given that profit and that buyback story very much in focus this morning. Speaking of buybacks and profits, UniCredit also in focus, boosting their shareholder payout to about 9 billion euros. They're also in the midst of that takeover battle with Banco BPM, trying to get their hands on some stake of Generali as well. We're going to dive into those details shortly. Kering is the stark underperformer here. They're warning about profit losses for the full year. We'll see how that reflects on the indices, Anna.
Yeah, so a full complement of sectors to keep an eye on then, Kriti, when it comes to the start of trade. We've got news from the banking sector, the energy sector and the luxury space. So that keeps us focused certainly on London and on Paris, and we will see how the Italian market performs as well. So this is the picture so far. The FTSE 100 is the one that's out of the gates. It's pretty flat, actually. A slight upward bias there. The IBEX down by 0.1%. Stoxx 600 then overall a little bit weaker, but we don't have an opening price on the CAC 40 just now, and we don't have an opening price, it would seem, on the Xetra DAX either. So we're waiting for those to open up, waiting for the Italian banking sector to get underway as well. What do investors make of the latest moves from UniCredit, or the numbers through from UniCredit in the context of all of that acquisitive action we've seen them pursuing? The DAX then opening slightly negative, the CAC slightly positive. Not a great deal of direction, it would seem, in this morning's session, Kriti.
Not a great deal of direction, but certainly some really interesting movers, especially when it comes to the commodity space here. Your biggest index contribution, I'm going to start with the FTSE here, just given that we're seeing more volume there. Actually seeing upside in the likes of Shell, likes of BP, and some of the other commodity-exposed names. But broadly, as you said, Anna, it is actually a fairly down day. Banks and maybe even media are the only kind of sole outperformers. The rest are marginal gains to the downside. When we look at the weights here, a lot of it coming actually in the mining sector, and I wonder if that is the kind of read-through from the tariff story that perhaps we were waiting for in the last 24 hours as well. The likes of Glencore, Rio Tinto, Anglo American, those are your biggest weights on the FTSE 100. Broaden that out to the Stock 600, though, and it's a little bit of a different story where you are seeing the Stock 600 see more of the kind of downside moves in some of the heavyweights like Novo Nordisk and LVMH.
We see the food and beverage sector is one of those that is going higher today. It seems that there's an asset sale at DSM that's being sold to Novonesis, that particular asset, and so as a result, that particular stock goes higher. But it's one of those days where just a little bit of news flow like that can push that share price higher, which then pushes the sector, and that's one of the 4 sectors that's doing well this morning. Yeah. To your point, and energy is also one of those sectors that's doing okay, so that's up by 0.3%. Of course, we covered the BP story quite extensively yesterday and again today. On the downside, we do have basic resources in retreat. Stora Enso is a paper maker over in Finland, and that stock is down by 4%. So it's not necessarily the usual names in the basic resource space that we talk about when we think about that negativity. But Stora Enso facing pressure, its EBIT outlook coming in a little lackluster, according to Jefferies at least.
Of the 3 stocks we were keeping an eye on in the lead-up to the open, Kering, BP, and UniCredit. I think we all expected Kering to drop and UniCredit to rise. We're seeing the exact opposite dynamic this morning. UniCredit shares down about 2.4%. Kering, despite their kind of drop in revenue being more than expected, actually higher by 4%. That is on light volume, though, so let's see how that all shakes out and bring in perhaps a true expert who can maybe sew some of these threads together for us. Lewis Dudley, Global Equities Portfolio Manager at Federated Hermes, joins us around the table. Luis, pleasure to have you on the program. I'm a little confused here because we keep talking about this kind of earnings outperformance in Europe that's been driving kind of the share price, or at least the outperformance relative to the rest of the world in the last 5 weeks or so. Is this a blip? Is this a momentary moment in the sun?
I think, we're seeing so much volatility at the moment, so much changing on a day-to-day with, the tariff news and people absorbing that actually there's a lot to change, and obviously people looking for those earnings expectations coming in, and often, for certain sectors, we're seeing some really quite lofty expectations still that are moderating, and that's when the market gets disappointed. And certainly maybe on Kering, it's a case of the opposite story where expectations were very weak, and then now it's coming in above that.
I mean, it's fascinating that it's almost this kind of rewarding for you're not as bad as we thought you were, which is almost counterintuitive to the growth story you need. It feels like a lot of the buyback story and payouts are also driving the price action. At the same time that we're talking about deals and takeover activity, how did those two work together when we're still talking about underperformance in Europe?
Yeah, I mean, both those things are also very kind of questionable, right? So when they announce the buyback, obviously it can be a positive surprise, but until they actually go through with it, we don't kind of know actually how good that might be. And sometimes, companies are a bit more hesitant about announcing in a more kind of exuberant or enthusiastic way around buybacks because they actually don't know at the moment. There's a lot of uncertainty, in particular with inflation moderating, but maybe not as much, and they may see this resurgence. So a lot of uncertainty for management teams at the moment, I'd say.
Louise, good morning. Can I ask you about the tariff story and how you're navigating that at the moment? What's the sort of mindset you're in when you look at all the news around tariffs and how you respond to it?
Yeah, so I think at the moment we definitely see China being very well prepared for tariffs, and actually Europe could be a potential weak spot because if China can't sell into the US as much as expected, then where does those excess supply go? And therefore, if that comes into Europe and then they get kind of those weaker prices. So actually, it's a bit of a challenge for perhaps European domestic names where they're seeing even more competition coming in from China where they hadn't previously.
So this is going to weigh on pricing power for European corporates, you think?
Yes, I think so. And I think what we've seen at the moment is that in terms of earnings expectations, that sales continues to remain quite buoyant, but actually it's the profitability that hasn't come in as strong as people were expecting.
So does that mean then we get quite divergent monetary policy then between Europe and the Fed? Because if the ECB is going to have that as the sort of slight deflationary backdrop, that impulse coming through from China, will that justify a sort of an interest rate differential then between the US and the Eurozone? Because there have been periods where we've wondered whether that was such a good idea or not to have that differential.
Yeah, no, I think we're already seeing that, and I think expectations at the moment have been widening and widening, and now we're looking into how much could we see actually rate rises within the US, which is something on the ECB side we're certainly not even considering. So definitely in the US, while we've got low unemployment, we've got wage growth, the chances of inflation resurging, and then therefore the need for those interest rate elevation to come in is something that's definitely a bit more likely.
Louise, we are seeing defensive parts of these markets. We are seeing, despite perhaps complacency on the day of announcements, and we are seeing this kind of general appetite for the Mag 7 despite these sky-high valuations. We're seeing appetite for the likes of gold, even a little bit of a bid into the bond markets in Germany and in the United States as a function. There does seem to be a caution baked into this market. What's the hedge?
Yeah, I think, people are looking for that quality bias. I think, it's something actually we're also looking for within China. So where is the quality growth within China because of the deep kind of valuations that we can get there? So that's something that's quite important. And at the same time, with the big benchmark positions in the US, the Mag 7, those are names that are quite hard not to own. And we know that they are still delivering good growth numbers, going into this year, next year. We do expect a little bit of a slowdown maybe versus expectations from the end of last year, but still well ahead of the rest of the market, I'd say. And tech is definitely still a sector we're looking at.
It's interesting you mentioned the China component of this because, Anna, we talk about this on our show all the time. The read-through into the mining sector, the read-through into the luxury sector. I almost wonder what the trade is in terms of what matters more for Europe, what's going on in the States, what's going on in China.
Yeah, absolutely. The push and pull between those things. We see it in the luxury space, don't we? Pushed and pulled between those two different consumer markets. I wanted to ask you, actually, picking up on what you were saying there, Louise, about appetite for European stocks, and Europe's done OK. I was reading, you were talking about the Mag 7 and still liking the technology names. I was looking at some research by Barclays talking about going actually short US exceptionalism in the short term as a sort of temporary tactical trade, and they say they've been right to be long Europe over the last 6 weeks or so. So if you stay in tech, are you in danger of missing out on some of the positives that have been happening in Europe in terms of that stock outperformance?
I think within Europe it's important to be very selective because there's still a lot of sectors that are not, doing so well because of their exposure to China, and we haven't seen that rebound in China yet. In particular, autos, I think, is a sector that, Europe very overexposed to, and that whole sector continues to be weak. And obviously the tariff, all of that, comes in very poorly for them as well.
Yeah, are you expecting, there's all kinds of themes that people were looking ahead to 2025 to see more of, and banking M&A could be one of those. Is that something that you see as delivering some strength for European banks and the European banking sector?
Yeah, I think so. But I think actually M&A more broadly as well. I think we're starting to see more deals, everyone talking about different kind of ins and outs that could happen across the space. And I think because of AI and the ability to really think about different business areas, different growth areas, but not specifically within banking, I wouldn't say.
Yeah, interesting that, Kriti, we were talking about in the credit space earlier on about how maybe leveraged buyouts haven't necessarily picked, or the M&A story certainly hasn't picked up in the way that maybe people thought. And this goes to the tariff story as well, doesn't it? Because if you've got that, you might have expectations of higher growth in the United States, but if you've also got uncertainty around what tariffs are going to look like, that can have a chilling effect, and we'll see whether that is maintained.
Yeah, and I think so many people have said, who are still kind of bulls on the states, have been saying that maybe the tariff piece is offset by the fact that Donald Trump has a very deregulatory agenda, one that does spill over into Europe. Are you seeing evidence of that, Louise, that kind of maybe loosening of policy in the states has a ripple effect across the world?
Yes, I think so. I think, we're seeing that through Germany. I think the politicians, how they're talking about, when they're setting out their agenda, that deregulatory tone, I think has captivated a lot of attention across the public, and businesses do also obviously like it and they jump on it. And certainly we're seeing the US banks very much beneficiaries of that deregulatory trade and making the most of it also from an M&A perspective as well.
Louise, thank you very much. Thank you for joining us. Louise Dudley, Global Equities Portfolio Manager at Federated Hermes. Guy's gone, but that's no reason we can't still look at his core six. Let's do that. Let's have a look at how these European these large European corporates are performing today. There's a little bit more red on the screen than there is green, but not by a huge amount. I guess the largest mover there is Ferrari, up by 1.1%. The stock 600, actually, Kriti, across Europe is actually almost entirely flat right now. So individual movers might be making their mark, but overall we are flat across these European markets. Let's check in on some individual stocks, though. Joe Easton has some other stories for us. Joe.
Take a look at what's going on with Entain here in London. This stock really hit hard. It is the worst performing stock in Europe today and does look like it's just gone into a trading halt, potentially not getting a price ticking on that anymore. But the CEO standing down at Gavin Isaacs, leaving after 6 months only in the role. We haven't got a clear, or I haven't seen a clear reason for that, but the previous interim CEO is coming in and taking his place for the moment. There we can see it ticking further now, resuming trading down more than 10% on that stock. This is the owner of Ladbrokes, and also they've got the big partnership with MGM over in the US and the US sports betting. So a real shock for that stock today as the CEO stands down after less than 6 months in the role. Then we can see in terms of the luxury shares, we are actually seeing a rebound in Kering. Not too bad given the sales were down 24% on a quarterly basis, but all of that negativity priced in. So we're up close to 5% on that. Not much movement in the peers in terms of Kering, but it is really a rebound story for that company today. Then in terms of UniCredit, of course, all the focus on the M&A news flow that Kriti was running through earlier, but we are seeing them boosting some of their returns, but that doesn't seem to be lifting the stock. We'll have to dig down into why exactly there's disappointment on that one. I did note that the net interest income was down sharply on the quarterly basis. Potentially that is the reason there, but the buybacks did look pretty strong from UniCredit. We'll dig further into that one, as I say. Then in terms of the UK stocks, one of them was one of the worst performers as well across Europe. This is Bellway in the home building space, one of the mid-cap home builders, actually giving a very downbeat guidance in terms of the recovery or the potential recovery in the UK housing market. They're not quite seeing as much of that as they would like to, according to the statement, and we're seeing their house broker Citi was flagging some real cautious statements from that company today. So Bellway dropping in London, and then finally another one declining in London and in Germany as well. This is in the travel space. TUI giving disappointing updates on their bookings numbers. Bookings from both German and British customers not looking good. The UK bookings in negative territory, according to their statements. That's hitting that company today on both the German and UK exchanges. TUI in the travel space, one of the worst performers on the Stock 600 this morning.
Joe, thank you. Joe Easton from our equities team. Let's get Kriti to some breaking news coming through from the EU Trade Commissioner, Maroš Sefcovic, then. This morning, when I saw the news that we'd had the 25% tariffs imposed on aluminium and steel, I then thought to myself, well, when does Europe's retaliation come? Because we've actually had the news of how these are going to be imposed. So now we get the Trade Commissioner speaking in Parliament saying that he deeply regrets the US decision on tariffs. The US will be raising costs for its own businesses, so pointing out some downside there to the US itself. Then Sefcovic going on to say that the EU will always protect its interests and will impose countermeasures against US tariffs. And I suppose that comes as no surprise because Europe had already said that it would, and it fits with the 2018 playbook where we saw steel and aluminium tariffs go on, and then we saw the imposition of tariffs on the likes of Harley-Davidson, Levi jeans and all of those iconic US names.
Yeah, it's a really interesting one as well because this is also coming right on the heels of those steel tariffs as well. And this was something under the Biden administration that had kind of been put on ice in the form of quotas, that if there weren't no tariffs imposed, maybe the quotas would be, and Europe hadn't fulfilled those quotas as well. So you can perhaps see that maybe they have some leverage. It's interesting as well because now I'm curious how this actually affects some of the markets because you're not actually seeing much market reaction off of these comments, even though this is coming from kind of an official government body as well. So Eurodollar still at 103 handle, but risk sentiment certainly slightly tilted to the downside.
Right, yeah. I mean, we're flat across European stocks, aren't we? But yes, US futures certainly look a little negative. I mean, Sefcovic saying that the EU stands open for negotiations with the United States. And as we've seen with Mexico and with Canada, there has been some willingness to negotiate. We will see what Australia manages to carve out when it comes to aircrafts as well.
And it comes to the buying as well. Remember, Donald Trump is trying to get Europe to buy more LNG, knocking at a door that I think has been swung quite widely open, even by Ursula von der Leyen herself out of the EU. We're going to continue to monitor that conversation. The market moves off the back of it. Coming up, we go back to maybe one of the key themes in Europe right now, and that is banking consolidation. UniCredit reporting a fourth quarter profit beat, allowing it to boost shareholder returns. We're going to dive into the numbers and the consolidation story next. This is Bloomberg.
Welcome back to the opening trade. 19 minutes into our European session, and we have a fairly flat market, actually, proving itself to be quite resilient to what we're hearing from the European side around trade this morning. We're hearing from the German Chancellor, Olaf Scholz, saying that the EU will respond together against Trump's trade tariffs. He was making those comments in a speech to Parliament. Almost the same time, we were hearing from Maros Sefcovic, who was making a speech to the European Parliament, then Kriti, saying that the EU, as we said in the last part of the programme, the EU will impose countermeasures against US tariffs. We'll wait for some detail as to what those will look like.
Yeah, some strong comments coming from Scholz, now adding that he hopes the misguided path of tariffs can still be avoided, perhaps that 180 U-turn that we've seen on the Mexico and Canada front as well, saying that trade wars always reduce prosperity for both sides. So we, of course, will keep you apprised of this headlines as we get them. Let's get to some earnings news now as well, because Europe, of course, has one eye on the banking consolidation story as well. It comes on a good day where UniCredit shares have also been moving quite a bit, down about 3% in trading. The Italian lender sees a, quote, moderate decline in net interest income in 2025, but are still talking about increasing some of their shareholder payouts to the tune of about 9 billion euros, I'm told, all as they try to get their hands on some of the other Italian banks. Tommaso Ebhardt, Bloomberg's Milan bureau chief, joins us now. Tommaso, the Italians are keeping us busy. Let's talk about the earnings first, then we'll get to the consolidation story. The shares are down quite a bit, despite these earnings actually quite strong. Can you connect the dots for us here?
Yeah, hi, buongiorno from Milan. We've been quite busy since the start of the day. Today, obviously, UniCredit reported early in the morning, and we can call it a mixed bag. On one side, clearly results were better than estimate. On the other side, the outlook for 2025 is somehow less ambitious than what Andrea Orcel is usually used to give investors. UniCredit somehow created a narrative of beating expectation, and for 2025, as you said, they expect a moderate decline in interest income. Also, revenue for 2025 are seen somehow below what the estimates are for now. So it's sort of a mixed bag. It's going to be a difficult year, as we read in their earnings statement. But on the other side, as you said, the shareholder return will be quite important. Also for 2025 is going to be more than 2024, and then they target 10 billion euros net profit for 2027. So overall, we can call it a day where investors are selling on the news. Essentially, they are selling because probably the results and the outlook is less exciting probably than what they were expecting.
Yes, and Tommaso, how does M&A complicate the picture over at UniCredit? We've heard from the management there, we've heard from Orcel setting out why he's going after some of the targets he's after. So talking about BPM as being core to the geography of, that they have already at UniCredit, and Commerzbank offering some optionality around Germany and around Poland. Talk us through some of the M&A lines.
I mean, clearly, Andrea Orcel has changed the landscape of Italian banking. He's pursuing M&A. Today, He reiterated in the statement that M&A will come only, if it makes sense for the bank, if it can generate the same size and the same value that organic growth will do. Europe needs stronger banks. That's the argument by Andrea Orcel. That's why he has started his campaign in Germany, but also in Italy. And his movement in Italy has generated a cascade effect after UniCredit announced a bid for rival Milan wealthy bank, Banco BPM. And then we had Monte dei Paschi di Siena surprisingly bidding for the investment banking Mediobanca, and then the other day we had Banca Popolare dell'Emilia-Romagna bidding for Banca Popolare di Sondrio. So after a decade, when we have discussed even on Bloomberg TV the need for consolidation in the Italian banking industry, is happening now, and Andrea Orcel is the person who has somehow started this battle for the control of the Italian banking system.
Certainly something that's keeping us on our toes when we get those Banco BPM earnings after the bell today. Bloomberg's Tommaso Ebhart in Milan, we thank you so much. He was just talking about UniCredit as well. UniCredit CEO Andrea Orcel will be joining Bloomberg TV tomorrow at about 9 a.m. London time. So we're going to get his views on that consolidation story.
Let's go to another earnings story. Kering shares rising as investors have been a little encouraged by better than expected profit, it would seem. And are there signs of stabilization at Gucci? The company's biggest brand has struggled in recent years. Let's talk to Bloomberg's Angelina Rascouet, who covers the luxury space for us. Gucci's still not out of the woods then, it seems, from these numbers. Angelina, tell us how it's been doing through this last quarter.
Yes, hi, and indeed, Gucci in the fourth quarter, sales were down 24%. So indeed, that was a slight improvement from the third quarter when sales were down 25%. Gucci has been the problem child at Kering for many years now. Kering derives around 2/3 of profit from Gucci. And last week, Gucci actually said that its designer, Sabato De Sarno, which it had named about 2 years ago, was leaving. So all of a sudden, investors will have to be patient, because that means for the next few quarters, the creations will be done by the studio. And so there's still a lot of uncertainty there.
When you talk about that uncertainty, though, is there a turnaround plan? If you look at the fourth quarter numbers very quickly, walk us through the fact that those numbers came in line with estimates, and those shares are still rising. Can you just square that circle for us? 30 seconds.
Absolutely. Basically, they really insisted on the fact that they're doing cost controls, but also there was low sentiment. The shares of Kering, have been falling. They fell more than 70% since their peak in 2021. Last year, they fell 40%. So I think we're going from a low base. So any indication that they have some things under control is probably enough for investors to be buying today.
Certainly something we're going to be keeping a very close eye on. Kering shares almost higher by 5% this morning. Bloomberg's Angelina Rascouet in Paris walking us through those details of the French luxury giant. Coming up, we're going to shift focus to the commodity sector. Traders preparing for a 25% tariff on U.S. imports on steel and aluminum. We're going to speak to Marcus Garvey, the head of commodity strategy over at Macquarie next. This is Bloomberg. This is the opening trade. We're about 30 minutes into today's session, seeing some marginal moves on the index level. I'm looking at a stock 600 that is quite literally flat at the moment. The DAX seeing some marginal gains. The FTSE 100 higher by 0.1%. Now, this is all really important because on the surface, it looks like calm, but underneath, you are seeing perhaps a little bit more of the storm, more of the volatility, and a lot of that is driven by the earnings story. Let's go there. One of the top stocks we've got our eye on, BP, has pledged major changes at its upcoming strategy update after reporting a sharp drop in profit. Bloomberg's James Herron joins us now around the table. Two key words: strategy reset. What does that mean?
It's a good question. I think people have suspect what it could mean. And why they might be doing it this time. Obviously, over the weekend, we had the news that Elliott Investment Management has taken a stake in BP and was planning to push for significant changes. We still don't know what exactly they're planning, but certainly the expectation among the analyst community has been perhaps board changes at BP and probably most likely a move back toward oil and gas, where the better returns are. from clean energy. So this is a big shift because BP 5 years ago, when Bernard Looney, the former CEO, came in, was the first to really embrace net zero, to set the most ambitious targets. And it hasn't really worked out that way. It seems the profits are still in oil and gas, and that's where investors want them to be in their core business.
Right, yes. It seemed that, yes, we saw BP as the kind of flag bearer for the industry cleaning up itself, and then shareholders kind of coming to the fore and saying, actually, we can go find wind assets and renewable assets elsewhere. We want you to just keep focusing on oil and gas. Is that how we explain the BP underperformance over recent years?
I think so, yeah. There's a lot of issues to it, and part of it is that BP, going back to the Deepwater Horizon tragedy like 15 years ago, it has a weaker balance sheet than its peers, and so its returns to investors, which have been the crucial thing for the last few years, share buybacks, dividends, are always seen a bit more tenuous than for Shell or for Total. And obviously, if you're in that position, the investors want to go where the strongest returns are. And that has been oil and gas, especially for the last few years, because prices have been high.
OK, thanks very much, James. Thanks for the update. Bloomberg's James Heron with the latest on BP. Those shares pretty flat this morning now. Let's talk about something that's on the move this morning. That's the gold price. Gold hit a record earlier before paring gains after US President Donald Trump imposed tariffs on steel and aluminium imports. Joining us now to talk about a host of metals, Marcus Garvey, Head of Commodities Strategy at Macquarie. Marcus, nice to have you with us. So I'm going to start with the gold price because we do seem to be seeing quite a lot of volatility in that this morning. A lot of people, I mean, we're at 2,914, it seems, on gold right now. A lot of people wondering whether we get to $3,000 a troy ounce. Is that something that's on your radar, Marcus?
I think it's on everyone's radar, and good morning. Absolutely. It's a natural thing for the markets to focus on in terms of everyone liking a big round number. I think in terms of the near-term drivers, of course, the tariff headlines adding to geopolitical uncertainty as a tailwind for the gold market. But one of the things that's also worth highlighting that's been quite notable in terms of broader market price action that's supporting this is if you look at some of the moves we're seeing in interest rate markets, although treasuries haven't been particularly volatile, we've seen a much bigger move in front-end real rates because of inflation expectations going up. And that, alongside the broader momentum breakout, is, I think, supporting the gold price in the near term.
Yes. So there are a host of reasons. You've set out some of them. So there's interest rates in there. There's the geopolitical drivers. I was reading about central banks buying, particularly people talking about the PBOC. But then I think about whether we might see some sort of resolution in Ukraine, or at least the first signs of that by the end of this week. We've seen some markets responding to that over the last couple of weeks, Marcus. Is that something that we need to be aware of when fixing $3,000 in our minds on gold?
I think from a near-term perspective, if you've got anything that reduced geopolitical uncertainty, it would naturally be a slight headwind for gold. But if we look at how gold performs in relation to that sort of geopolitical risk premium over time, it's generally a relatively short-term driver of the gold price. And then actually, I think the bigger thing when we look at the broader mix of policy changes that we're getting from the Trump administration for gold is not just that in terms of things leading into Russia-Ukraine negotiations, not even the tariff dynamics that are front and center at the moment, but really what we get in terms of broader fiscal policy. And when we get into the proposals around tax, I think that's where we'll really see the implications for the fiscal balance, and that as the key driver for the gold price. Because if you think about what's been underpinning gold's strength, you mentioned central banks, that's certainly part of it. But I think over, say, the past 3 years, the resilience of private sector investors in the face of relatively high real rates has been very striking. And a key reason for that, in our view, is that the deteriorating and really very poor fiscal outlook that you have in a number of major developed markets, obviously principally the US. So the implications for that from what we get in terms of Trump administration tax policy proposals is going to be key more for the outlook over, say, the balance of the year and into 2026, rather than just the immediate short-term price action.
So, Marcus, talk to us a little bit about that immediate short-term price action, because the reports initially of these tariffs on steel and aluminum that did ultimately drive the gold price to these record levels came on Sunday night. We all woke up Monday morning, got our Bloomberg terminals out, looked at our handy-dandy pricing, and found very little market reaction. But we couldn't quite understand why. There was some analyst commentary that it would take 2 or 3 days for the markets to digest it. Why are the short-term markets not reacting in the way maybe they would have 4 or 5 years ago?
And when you say, sorry, little in terms of price action, do you mean specifically for aluminium, for instance, or do you mean on a broader basis?
Well, both. I mean, you take your pick. I was referring to steel and aluminum, but I would argue that there's an element of complacency in the broader market as well.
So I think there's two aspects there that I'd point to. One, on a broader market basis, the extent to which we're still seeing markets, reasonably speaking, discount the macro implications of what we've had on tariff announcements. That's, I think, partly because, of course, you had the Mexico-Canada tariffs announced and then delayed in terms of implementation and obviously may never be implemented. And also that the level of tariffs initially placed on China and the response that we've seen from China is also less than some people in the market might have feared. But I think if you focus then on steel and really aluminium specifically in terms of the tariff implications, we would say that actually for aluminium prices, the tariffs have very little impact in terms of something like the LME market price. If anything, at the margin, we'd argue it's slightly net bearish because it does increase the price that's going to be paid by US consumers in the near term and therefore is slightly demand destructive. But really what we're seeing in terms of the key impact on price is the US price, which is not in that exchange price. It's the US physical premium that consumers pay on top of the price. And if you take that back to even say prior to Trump's election, the US physical premium already has roughly doubled, going from sort of in the order of $400 a ton to more like $800 a ton at the moment on where forward pricing now is. So that has moved substantially.
So, Marcus, you talk about it being slightly demand destructive, and this is, of course, in the kind of falling background of falling aluminum and steel prices as well that we've seen prior to these tariff announcements as well. But how, at what point does that affect the supply chains for, say, car makers or defense makers or manufacturers when they're looking to price some of this? How does that show up or not show up?
President Trump said in his press briefing earlier today that ultimately this would lead to lower prices in the US because you'd see production increases in the US. I think there's the possibility of that if we move further down the road. But in the very near term, we do think this is going to be a price increase for US processors and consumers, and one which is not a full pass-through of these tariffs, because if you look at where that supply is coming from, particularly take the example of something like Canadian aluminium, on the net backs of the received price that's going to be earned by producers in those regions, it's still going to be, I think, in most cases, the best option for them to deliver into the US and absorb some of that tariff themselves. But it will, as we've seen in terms of the market pricing, also, I'd say in terms of the steel futures move that you've already had, it's clear there that you're going to have higher prices paid by US processors and consumers in the near term, and that's hard to avoid. In steel, I think there is scope for utilization rates to go up and increase supply domestically. In the case of aluminium, on a sort of 1 to 2 year view, you might talk about a couple of small smelter restarts, but really there isn't anything in the near term that's going to change the domestic supply in aluminium in favor of increased production.
Marcus, I wonder what you're watching for when it comes to retaliation, because before we started this cycle of tariffs and response, various guests were telling us, what matters is the tariff itself, but then also what retaliatory activity we see. And we've heard from Europe this morning, Maros Sefcovic saying that the EU says it will impose countermeasures against US tariffs. What are you going to be watching for from a commodities perspective? What do you think is likely to be in the crosshairs?
I think if you look at the last trade war, obviously, not so much for Europe, but on a broader basis, things like agricultural products were dragged into it. Also, things not commodities related, like bourbon, was dragged into it. So it was a whole host of things. I think from a commodities specific perspective, though, really the biggest thing is, I think, away from the focus that we're having on Canada, Mexico, also Europe, and specifically aluminium and steel, but into what happens with China. Because as that 10% tariff comes in, we see that get ramped up progressively, and therefore we get greater response from China, as we've already seen in terms of the Chinese response being very commodity targeted in terms of things like tariffs on coal and LNG imports and some agricultural commodities. Do we see that roll out to a broader suite of commodities? Do we see increased rates? And also, do we see restrictions on Chinese exports, as has been talked about on some of the minor metals in relatively recent time? And then I think the other point will be, if we get a more aggressive approach from the US towards China, which would be, in our view, more demand destructive because it would drag on global goods trade global industrial production and therefore commodities demand. What do we get in terms of a Chinese offset to that from something that would boost domestic demand? So that I think when we try and net all these things out at this point, it's very hard to be overly prescriptive about exactly how we think things are going to play out.
OK, and I wonder how South Korea fits into this picture as well, because we're just hearing some news lines coming through from South Korea saying they're making all efforts to build close ties with the Trump administration. I mean, this is a country that is very much in focus when it comes to some of the tariffs we've already heard about from the Trump administration.
I think one of the things that's interesting in that context, if you read through, we don't yet have the aluminium document, or at least didn't at the time of me coming on air, but if you read through the steel document that was published today that goes through the tariff imposition, unlike after the Section 232 tariffs in 2018, where you then got a whole series of carve-outs, both for some products and also for a lot of countries, really those that were part of the US security umbrella, this at the moment is incredibly explicit and really quite maximalist in its approach of saying no exemptions. Now, to what extent that is something that is fulfilled or ultimately becomes a negotiating position is up for debate at this point. But as a starting point, it's very, very clear that this is an evident distinction from what you had back in the first Trump administration and that initial point of imposition of the 232 tariffs.
Certainly something we're going to be keeping a very, very close eye on. We'll let you go and read maybe perhaps the aluminum document as well. Marcus Garvey, head of commodity strategy, giving us that breaking analysis on some of those South Korea headlines that we were just talking about. Of course, just reiterating that South Korea is now looking to make more of an effort with Donald Trump and the Trump administration after holding that emergency meeting yesterday as well. That tariff story echoes around the world as the European Union said it will respond to any tariffs the U.S. might impose on it, escalating that transatlantic trade dispute. We're going to dive into the details next. Stick with us. This is Bloomberg.
Welcome back to the opening trade. We are 46 minutes into today's session. It is Tuesday, the 11th of February. The European equity session then, modest gains, really quite flat actually across European stocks. There's a lot going on though. The European Union has said it will respond to any tariffs the US might impose on it, escalating a potential transatlantic trade dispute. Joining us for more is Bloomberg's Oliver Crook, who's following the details here. So we've heard from Ursula von der Leyen, we've heard from Maroš Sefcovic, the trade commissioner then, Ollie. What do we think Europe is going to do in response to the US?
Yeah, that's right. We've also heard from Olaf Scholz, who was speaking in the Bundestag a little bit earlier. I'll just summarize some of the things that they've been saying. They've all been having a pretty consistent message, all came out more or less sort of in unison, saying that basically, of course, this is a lose-lose situation. This is going to harm the United States. This is going to harm Europe, really sort of making all the arguments for free trade that they always do. Of course, these are arguments that don't cut a whole lot of muster with the Trump administration. What we know so far in terms of what the countermeasures will be is we don't know what they will be specifically. All we got from Ursula von der Leyen is that the tariffs were unjustified on the EU. They will not go unanswered, that they will trigger firm and proportionate countermeasures. Again, taking all of the trade action we've seen over the last few weeks, the Europeans have obviously closely watched what happened with Canada, closely watched what happened with Mexico, trying to appraise basically what this is in terms of the negotiation tactic. What is it that Donald Trump wants? Of course, on the issue of trade, there's a large trade surplus between the EU and the United States. Last year was about $230 billion. That is, of course, part of what Trump wants to close. But the question is, how much of this will spill outside of the world of trade? How much will this be used by the Trump administration potentially not just to get the Europeans to buy more oil and gas and that sort of thing, but potentially to not regulate U.S. tech companies? Could the sort of question of Greenland come into play? I mean, these are all of the things that people are going to be thinking about over the next couple of days and weeks. And of course, all ahead of the Munich Security Conference at the end of this week, which will be the first high-level meeting between the new Trump administration and the Europeans.
So, Ollie, what might the potential options be here in terms of countermeasures? I mean, I know we hear this word quite a bit, but the criticism of that is, does Europe even have any levers to play?
I mean, listen, they have a couple levers to play, but at the end of the day, the trade surplus in goods with the United States is $230 billion. So that is the chip that the United States is playing with, and they know that, and that is the thing that they want to close. I mean, what we saw last time that this came around, the first Trump administration, there were countermeasures that sort of targeted motorcycles, Harley Davidsons, jeans, bourbon, but that's not really the same sort of side of the scale. When you think also about sort of proportionally these tariffs, who is it going to hurt the most? You see you see the Bundestag there, you see the Germans. You look at the sort of steel exports to the United States. Germany is the 7th largest in terms of the steel exports that go to the United States. It's about $3 billion. So it's going to hurt the Germans most, obviously, in going into this election campaign. But again, there are other measures. I mean, there's also the question of services, for example. The U.S. runs a pretty large services surplus in terms of trade with the European Union. Could they find a way to target that? These are all going to be sort of in play. But again, I think at the end of the day, what they need is to hear what actually Trump wants and what they're willing to give.
Yes, and we're just looking, as you said, Ollie, we're looking at live pictures of the Bundestag and these conversations ongoing. We had seen Olaf Scholz, the Chancellor, speaking there just a moment ago. So we're hearing from these various German leaders. And that puts me in mind of the fact that we're very close to a German election, Oliver, and we're looking for European governments to respond strongly in the face of these tariffs from the United States. And we have a government in France and we have a Prime Minister installed and a budget, but we are working our way up towards big political events in Germany.
Yeah, exactly. And a very sort of diminished, let's be honest, diminished France, diminished Germany. I mean, no matter what comes out of this election, unless there's a real shock on election day, you're going to have a sort of coalition that is going to be very sort of shaky, potentially. And the number 2 party, of course, is a party that wants to withdraw Germany from the Eurozone, from the EU. And that is not the sort of rhetoric that we've heard from some of the other candidates. I mean, even Friedrich Merz, who did align himself on this one immigration policy with the AfD, was very explicit in the debate over the weekend that the only way to move forward for Germany is to have more integration, or at least have a stronger consensus building at the European level, because at the end of the day, Germany, France, Italy, none of these countries can compete against the United States, against China. So there is a consciousness there. But at the same time, with all the sort of fragmentation within German politics, but also French politics, with some of these forces that want to sort of move in the opposite direction, I think it makes it a very sort of difficult needle to thread, particularly when you feel all this sort of economic insecurity as you do in Germany, particularly, again, with a 3rd year of contraction, and potentially these tariffs looming is only going to be even more powerfully damaging to the German economy. The only silver lining potentially is that this may actually force the government, the politicians, to make compromises, to say, listen, this is a really dire situation. Maybe we look at the debt brake. Maybe we look at other ways to stimulate the economy, because at the end of the day, this is going to hurt Germany the most.
It's certainly something we're going to be keeping a very, very close eye on. We know it's going to keep you busy as well. Bloomberg's Oliver Crook, we thank you so much for walking us through the stories and the narrative, certainly coming out of Berlin ahead of that election in less than 2 weeks' time. On the topic of staying competitive, specifically in Europe, perhaps France having a bit of a closer shot at this, especially when it comes to the AI summit at the moment. We are getting live pictures, I believe, from the Grand Palais in Paris. We are getting, awaiting, I should say, the arrival of Emmanuel Macron. He made some comments at the summit yesterday, and we did see Justin Trudeau attending the summit as well. We do know that Vice President J.D. Vance is going to be speaking, I believe, at 9:30 a.m. UK today. And at the moment, on your screen, you are seeing the French foreign minister awaiting that Macron arrival. But, Anna, the conversation there has very much been quite similar. How do you invest in AI? Is the Trump playbook of attracting investment, perhaps on a smaller scale, the way to go?
Yeah, European competitiveness. What can Europe do to make itself more competitive? What can Europe do in the face of tariffs from the United States? We know that President Trump doesn't like the way that Europe regulates the tech sector. And so you wonder, Ollie was giving us a long list of items that Europe might have at its disposal to throw at the Americans, to suggest, maybe we could give you this. And they've said the lines of communication are open. Is there something around tech regulation that could be employed to try and please the U.S. administration? That could be something that no doubt is being discussed, at least in the halls of the Grand Palais over in Paris.
Yes, at the same time that we know that France has decided to keep its digital tax as well. That was one of the major headlines coming out of the AI summit yesterday as well. So that's something we're keeping a very close eye on.
Yeah, let's run through some of the other things that are going to be happening. We're waiting for J.D. Vance, of course, the Vice President, to speak at that AI summit. That'll be happening in the next hour. Here are some of the other things we're focused on. From the UK perspective, Andrew Bailey is going to be speaking today. We've already heard from Catherine Mann speaking over at the Bank of England. So she's giving a speech at the moment. We've got the Fed's Powell testifying to the Senate Banking Committee. We'll get CPI data out from the United States, as well as some earnings stories. Banco BPM of more interest than usual, perhaps, because of the Italian banking consolidation story, and Coca-Cola AIG over in the United States. Let's return to that news about the EU saying it will respond to any tariffs from the United States that might be imposed on the bloc. Let's get a markets perspective. Bloomberg's Valerie Teitel is with us. Valerie, we've been talking to Ollie then about some of the politics and the levers that Europe might try to pull. I mean, I was going to ask how Europe is digesting this. Overall, if you look at sort of Stock 600 as any measure of risk appetite, it's not moving this morning. It's pretty flat.
Yeah, so if we now go into a tit-for-tat trade war, the emphasis goes from maybe the FX market to the risks market here in Europe for equity markets, right? For both sides of the Atlantic, frankly, not just in Europe, but also in the U.S. if we enter into this tit-for-tat escalation. And for now, we have, basic resources in Europe to the downside, but generally, there doesn't seem to be a big risk-off reaction to this. I also have my eye on gold. There wasn't necessarily any reaction in the yellow metal and the precious metal to these announcements, and that's something that has been a safe haven play in the last few weeks. And you guys have talked about this in the last hour, that the big move to the upside in gold this month. But it doesn't seem like it's reacting very much to this news. It does seem very muted. But I think it's very interesting, Anna, that we're getting something out of the EU even before Trump announces this reciprocal tariff that he has talked about in the last 2 days. The announcement could come today or tomorrow. Seems like the EU just wants to get in a better negotiation position probably before the next step of tariffs come around.
Hurt already by steel and aluminium, perhaps, I suppose.
Yeah, and I think it's very timely that we're now starting some comments coming out of major European companies talking about how they could really deal with that tariff risk. We're seeing comments coming out of the Kering CEO saying they may review their pricing strategy if U.S. tariffs are imposed, and they have no plans to produce in the U.S. to counter those tariffs. At the same time, we're getting headlines out of the BOE's Catherine Mann, I believe the first time since she made kind of that 180 on that decision split. Walk us through the comments.
Look, this is the arch hawk turned arch dove, the one to vote for a bigger cut last week. There was two on the council that did vote for a bigger cut. She was one of them. A lot of attention on that just because she has been so hawkish previously. But she has, she said in the FT article she wrote this morning, she's repeated this lines in her speech this morning, that the vote is about risk management and communication. She is worried about the downside risks to growth. She is not worried about the upside risk to inflation. And she thought that a bigger cut last week would be a good signal to the markets, to the economy, that the Bank of England is there and watching. It's funny to see the comments from Andrew Bailey, though, last week. He said, don't look at the vote count. Don't put too much weight on the voting. But the market very much did. Yeah. This opens up the door to perhaps a big dovish shift, maybe an acceleration of cuts from the Bank of England.
She was clear that she wanted looser financial conditions, and at least in the very moment after she voted for them, that's what she got. The market did respond to her voting pattern.
Yeah, we'll see if that continues and maybe what the more further rationale is as we get more of those data points. Bloomberg's Valerie Teitel walking us through the BOE story and, of course, that tariff reaction. As we're speaking, or as Valerie was speaking, we are seeing Kering shares pair some of those gains, especially a lot of those comments coming on how they're going to be responding to those Trump tariffs. That does it for the opening trade. The Pulse is up next. Stick with us. This is Bloomberg.